Auren Realty Group, and I am sitting here with Dave Smith, who is our in-house preferred lender. And today we're going to talk about investors and people that are looking to purchase a secondary home, and what are the differences in down payment, a little bit about interest rate, and what are some aspects that people should be looking out for, and the difference compared to a first-time home buyer or a buyer buying a primary residence. So let's get to it.
Cool.
So tell us a little bit about the difference in down payment if we have a client that wants to buy an investment property or a secondary home.
Okay, so those are two different things.
Mm-hmm.
We'll go the easy way first, which is their secondary, or I like to call them vacation homes, because they have to be 40 miles away from their primary resident, typically in a vacation/resort lake area,
Mm-hmm.
for it to qualify. The minimum down payment right now for secondary residents is 10%. I don't want to get into rates a lot right now because all that's changed within the last 2 months.
Okay.
There's been some pricing things going on with Fannie Mae and Freddie Mac in regards to secondary homes and investor homes. They are trying to prevent too much of those into their portfolio, so they've raised the prices on them.
Okay.
So the FHFA head was replaced this week from the one that was put in by the last administration.
Mm-hmm.
And they're already talking about getting rid of that. So that'll be a really, really nice thing for us. It's really been hard for borrowers because it's a pretty significant price increase. And with investment properties, it's even worse, because they're wanting to keep investment in secondary homes to 7% total of their full portfolio of homes that they
Mm-hmm.
insure. It's not a lot. And so they're basically putting a stake in it, going, yeah, we're going to stop this right now, because people started working from home. They're like, hey, we have a lake house, or if we did have a lake house, I could work there.
Mm-hmm.
So that became a really popular idea in the last year. I've done a lot of lake houses, beach houses,
Gotcha.
cottages in the mountains, things like that, where people are like, it doesn't matter where I work now. So that kind of got stymied the last couple of months.
Okay.
We're working on it as a lender. We've already cut into that. Not sure how it happened, but we got a memo the other day saying our pricing is reducing on these issues. I guess Calibert's taking the hit on part of it, but fingers crossed that's going to go away anyway.
Mm-hmm.
But for an investment property, people, I think, get confused on what's required for down payment. For instance, if you're buying to live in your house, if you're a first-time home buyer, you can get in on conventional at 3% down.
Right.
If you sold your house last week and you're buying one this week, it's going to be 5% down minimum.
Mm-hmm.
On investment property minimum, you're going to be coming in at 15%. Most investors have the 15, 20, 25% down. The rates right now are typically going to be, a half to 1% higher, maybe more, depending on FICO score, and whether you put 15 down or 25 down, your rate's going to be different.
Right, and
So
that's different from a first-time home buyer or a
Right.
somebody buying that. It's going to be like 1.5% higher.
Yes.
Okay.
I mean, that's just an average across the board. I mean, it could be more, it could be
Sure.
less. It just, when you're talking about investors, each one's different, and each one's going to have to get treated different in the process, because some of them are self-employed, some of them do this on the side,
Mm-hmm.
and they're salaried. So there's really too much to get into. It's really an individual case by case on how it's documented, the guidelines, and all that kind of stuff, and how much they're going to put down, FICO scores, all that.
Right. So we get a lot of investors, people that want to invest from out of town, and a lot of them want to use a lender that's not in state. So what are some things that they should be looking out for? What are some items that they should take into consideration when trying to decide on which lender, like a lender like yourself, who's we work very closely with you, and somebody who's maybe they do know, but they're not, in Texas.
They're in California
Yeah.
or Oregon
Yeah.
or whatever. I think that really is the most important thing is whether you're buying an investment or a secondary home or your primary home. I mean, the first thing, I think the most important thing is working with someone that you can trust, that's going to be there. We all try to be there when we're needed. It's impossible to be there 24/7, but someone local, I mean, that's what I hear. It's some feedback that I hear is like, it was nice to have someone local. It was nice to have someone that I could talk to on a weekend if I had a question. If I am putting an offer on a house and all of a sudden the stakes got higher and I needed a letter that was, 10 more, 15,000 more, whatever the case,
Sure.
I was able to get one that day. Versus, well, I'm not going to be able to get one until Monday, and the cutoff for the highest and best is 6 o'clock on Sunday.
Right.
So I think that's a huge factor. I did one on Friday night. I don't like to do this, but I got a 911 at like 9:05 on Friday night. I'm so sorry. I know you hate me. I got a guy coming in from DC. He's looking at houses tomorrow. This is all last minute. I would never ask this from you if it wasn't a big deal. If he does a loan app, can you get a letter? And I was like, well, if he can qualify, I'll get him a letter. And he got on it. He did it, and I, got kids put to bed. And Friday night at 10:30, I was like, well, I'm gonna knock this out. Knocked out, got a letter, and they were making offers on Sunday. So there's no way that's happening. He sent me a pre-approval from a different lender, and the rate was about an eighth better. And it's a lender that is not local. They're national. I've seen a lot of their letters lately, and I've closed 3 deals in the last 4 months that started at that lender. So they have great rates on paper. They're not going to answer your phone. They're not going to answer a text at 9 o'clock on Friday. They're not going to get you a letter that weekend.
Yeah.
And they may not even be able to get you the rate that they quoted. So it's, we're just here to serve our local people and our people that are coming in. We want to be a local source of knowledge and confidence that I may not be able to do what I want to do, but I'm going to get straight answers.
Right.
And I'm going to get honest answers. And it may not be what I want to hear, but it's going to be the truth. And I know I'm not going to get to the 11th hour and they're going to put the rug out from under me.
Right.
Because I don't give a letter. I do not give a letter unless I see their documentation and I can prove that they can get to the closing table.
Are there any differences in qualifying when you look at like residential home buyers versus investors? Are they different aspects that you look at?
It's all about qualifying. I mean, you're talking about 2 whole different animals right there. So buying a home for yourself, the reserve requirements, and what I mean by that is what's left over after closing, how much money, liquid money you have. That's always different on a primary than it is going to be on an investment. On an investment home, you're going to have requirements for reserves.
Sure.
And again, that depends on how much you're putting down. The more down payment, the less reserves. Your credit score, the higher credit score, the lesser reserves.
Right.
But you're still going to typically have 3 to 12 months reserves depending on where you fall within that category.
Okay. And so if you were talking to like a newbie, somebody that's just thinking about getting into the investment side of real estate, what would be a couple of things for them to keep in mind and start thinking about or planning ahead for that venture for them?
I always tell people that are just starting out, it's like, find a mentor, find someone who's done this, who's been doing it. Most real estate investors that I've dealt with in the last 20 years are pretty happy to help a newbie or help someone learn some knowledge, help someone gain knowledge that they didn't have. I feel like that a lot of investors take a little bit of pride in that. As far as getting in the game themselves. It's just you got to make sure you have the money to put down. You got to make sure you have some reserves in the bank. You have to talk to someone, because it's like if you were going to buy a house to invest in, I mean, in 5 minutes we're not going to figure out what it is. I mean, you've got to get in depth. How much money do I have in the bank? How many assets do I have?
Sure.
What? How much is this house? You know, how much is it going to cost me other than buying into it?
Yeah.
What is the insurance on there? What are the taxes on it? You know, these are expenses that you're going to incur, and it's going to be part of your payment. And you really need to go in with eyes wide open. And the first thing I ask anybody who says, I want to buy an investment property is, do you already own a home? And if they don't, I say, well, maybe you should start there, because you can always turn your first home into investment property later when you want to upgrade. But it gets you into the game as well of knowing what things happen as a homeowner. Because even as an investment property owner, you're still a homeowner. I mean, you can have your management company, and you can have the lease to where the buyer or the tenant pays for everything. You're still the owner. You're still on the hook for things. So those are things you really need to learn about before just jumping in and saying, I got an investment property.
Right.
What do I do now?
Right. You touched on something actually very interesting, because we also get a lot of clients, whether they are first-time home buyers or they're buying, like, you know, they've sold and they've bought a new one, but mostly a lot of first-time home buyers that say, I want to buy this house as my primary residence initially, and then after a year or so, turn around and rent it out and have it as an investment property. So is there anything behind the scenes as far as like the loan or anything that changes, or that they should also take into consideration going in with that mindset of, it's my primary residence and then a year or two we're going to rent it out?
I just tell people, just don't tell me that, because as a loan officer for a residential lending company, I mean, they're not in the business of doing low down payment loans so somebody can build up a repertoire of houses, you know, and a portfolio. But it happens, and it happened with me when I bought my first house. You know, so it's not uncommon. But some of the things that are going to change once you flip from a primary to a investment property. One of the really good things is you've got a whole world of write-offs now that you didn't have before, because it's an investment property. But your insurance is going to go up. Your taxes are going to go up because there's no longer going to be a homestead exemption. Your homeowner's insurance is going to go to a tenant or a landlord policy, which is going to increase typically. I mean, those are just a couple things right off the top of my head that people need to be aware of, and just the exposure that they have as a landlord, which is, you know, it just everybody does once they start having tenants. But again, and that's something that you would talk to an attorney, or, you know, you guys are more along the lines of being able to refer, you know, informative sources for stuff like that.
Right. Well, thank you for your time, and it was really great to see you more than just through the passing hallways.
I know, yeah. In my neighborhood too.
Right. There you have it. Thanks.